Welcome to an episode of the JetRails podcast. We're going to be talking today about friendly fraud, the story behind friendly fraud, how you can stop it, really what's going on in the online shopping world that is causing merchants a lot of grief when it comes to not necessarily what we think of when we think of fraud with organized criminals that have a process of stealing credit cards, selling them on the dark web, but more individuals placing orders and filing chargebacks and having issues. And so I'm joined today by Yitz from the Pay team, and hopefully we're going to shed some light on that topic in some good depth today. So Yitz, with no further ado, would you do the honors of introducing yourself?
Sure, thank you. So I'm the founder of Pay. My background was actually in the finance. I had no payment experience. I actually say that if I knew what I was getting into before I got into this, I never would have done it. So I'm kind of happy that I didn't, because otherwise I never would have done it. Spent the last about 7 years focusing on building out Pay, and would love to tell you a little bit about what we do and obviously dig in deep into what friendly fraud is.
So 7 years in tech feels like a long time. I'm going to start off with my favorite tech question. How did Pay get its name? How did you come to it? And there's an interesting spelling. It's Paay, right? So how did that come about? Was was that one of 100 things that a few folks tossed around?
Yeah, so the original idea for Pay was something that solved the friction at checkout pain point. It was not looking for, it had nothing to do with fraud or any of that stuff. And a bunch of us were sitting around in a room trying to figure out, what would be a good name. And, I forgot who it was who actually came up with the name Pay. And they're like, oh, we can use a lot of things like I paid. And we saw that, the 4-letter domain was actually available for us to get. So we figured there's a lot we can do with Pay, and, we started out. Eventually now, we shifted to fraud and that stuff. So it has a little different connotation. But that was I guess the original brainstorming and how we got to Pay.
Interesting. So really the company's evolved in the 7 years. So you started out solving problems for people that wanted to get through, checkout faster, because that's still, I think, a major issue, and we've tackled it a few different ways on the podcast. I'm sure we'll tackle it a few more. Shoppers really don't want to be inconvenienced. They're looking for speed out of the entire shopping process, the checkout especially. And there are still no shortage of ways to get through that process faster. Companies like PayPal and Amazon Payments, Amazon Pay, offering for you to log in where you have all your information stored and skip over that. Places that are going to save credit card, through tokenization and other methods. I know there's an e-commerce platform out of Latin America, VTEX, that instead of having you use passwords that you're inevitably going to forget, it uses a form of two-factor authentication. Basically, drops you a message each time to verify that you're actually the shopper that you say you are. It's just this ongoing battle. So how did you pivot from your earlier beginnings that had more to do with that focus on payments and to where you find yourselves now, which is dealing more with the fraud side of the industry?
So that's a very good question. I'll give you a little bit of history on us. So the original idea was I loved shopping online. I hated the checkout experience. So I liked it when you walked into a store, you swiped your credit card, you signed, you were done. Online, it was enter your credit card information, your shipping, your billing. It was just a very broken experience. And there hasn't been that much novelty around that. We're basically making payments the same way we were, 30 years ago on e-commerce. So the basic idea was I have an app on my phone where I stored my credit cards and shipping address. This is prior to Apple Pay being out there. And what we did was we built a little plugin on the shopping cart. So imagine I'm sitting at my desktop, I enter I add something to my shopping cart. And instead of going through that regular checkout, what we did was we built this little plugin where I threw in my phone number, and it sent the push notification to your mobile phone where when you clicked on it, it pulled you into the app. So you had your default credit card and shipping address there. If you wanted to switch that, you was tap to change. And had the merchant information, the transaction details. In essence, the confirmation page was right there. And then it was if you were happy with everything, it was a biometric or a PIN code and you were done. So from a consumer experience, it was 30 seconds or less from the time I threw in my phone number until I completed the checkout. And it was more secure. And we thought, oh my God, this is a great idea. Let's go out there. There was something magical about the experience. We brought it to merchants and processors just to get their opinion. And they were like, this is pretty compelling on the consumer side, but our pain points are not really friction at checkout. I mean, that exists on every single website. So it's not like you can go to any website outside of Amazon with their one click and get like an easy checkout. Our pain points are, because these are what's called card not present transactions, we're liable for fraud. We're paying higher interchange rates. Our approval authorization rates are much lower than traditional brick and mortar. If you can solve some of those pain points, then you have a compelling product. So we actually naively went to the card brand and said, hey, can you give us a card present recognition with two-factor authentication, more secure than swiping a credit card? They basically told us to take a hike. So we said, okay, if we can't get it this way, let's figure out a way to, like, in essence, hack the system to offer something. And we found this program called 3D Secure, which offered the benefits that we were looking for, which was liability shift. At that point, it was lower interchange rates. So we naively again thought that our authentication would replace the 3DS's version of it. It didn't, but as we were, building it in, we realized, there was a shift to what's called risk-based authentication. Let's utilize that, bake it into our product, and use that as a way to incentivize merchants to do it. So we made that 3DS in the 1.0 very frictionless experience, and we were about to launch it, and then we're like, hey, wait a minute, this like hack that we did for our product, we can actually do in a regular checkout. And one of the issues we had been realizing, and why we wanted to incentivize merchants, was we realized there would be a chicken and egg problem with the other thing. Merchants wanted to see consumer adoption, consumer wanted to see merchant adoption. So we actually tabled that original product and said, let's just push out 3DS. At that point already, there was already talk of 3DS 2.0, which was, an understanding of where the future of, let's call it now, remote commerce or card not present is going. So it was after that we decided, let's focus for now strictly on the fraud side, while authentication and all that is still in our roots and our foundation. For now, this is what we wanted to, at least start to focus on, and then eventually pivot back to that.
Well, you hit on a lot there. And I think it's interesting that when we look at the retail space, we went from swiping cards to chips to now, in a lot of cases, the more modern options of being touchless, of holding the card, in proximity to the reader, or holding your phone in proximity to the point of sale system. And, so that's all there. And, people are still signing the back of their credit cards, but really, I can still remember people, taking carbon copies of my credit card, putting it through that little machine that would apply pressure, and they'd get a copy of it, and nobody cares anymore. It's that the credit card processor isn't gonna ask you to see the signature and to verify that the signature matches anymore. That's all done for, and that has nothing to do with 2020. That was all in process already. So I think that thinking about that and applying it to the online space of how is this evolving, how should it be evolving, and taking it a step deeper, that you're having conversations with CFOs and heads of finance and other people, because that's typically in businesses that are dealing with retail and and wholesale, whether they're dealing with online, offline, or a mix of the two. At the end of the day, who's choosing the credit card processing solutions and vendors? And it's coming back to somebody in finance, not necessarily the head of e-commerce choosing which merchant processing account they're going to be using at the end of the day. So figuring out what their friction points were and where they were stuck, that's how basically you kept listening to the market. Instead of dictating what you wanted your product to be, you said, no, well, this is where there's need, and that's the mother of all invention is necessity.
Yeah, definitely. And what's interesting is if you look at the card not present, I mean, in the credit card industry in general, there hasn't been a ton of innovation, from when they were originally created, to now. You've just, like you've said, we went from the carbon copies to the mag stripes to the chips and now the contactless. And that's over a period of about 60 years, maybe a little longer. In the card not present world, it's been a little bit interesting because the concept of card present, card not present was basically created around the time credit cards were created. And in those days, the concept of a card not present transaction meant I either, if I was a consumer, I didn't have my card with me, or if I was a merchant, I was taking a payment over the phone. And because they're inherently considered riskier transactions, the card networks are like, listen, you want to accept those type of transactions, that's fine, but you're going to assume the liability for fraud. You're going to pay higher interchange rates. It was basically a way of dissuading merchants from accepting those type of transactions, understanding that it made up a very small percentage of transactions. And that worked fine up until the 90s, and suddenly e-commerce takes off, and now you have this new type of card not present, where that merchants are saying like, hey, I can't even do a card present in this environment, even if we wanted to. So the original response to that was, okay, just here's 3DS. Sorry, here's 3DS, and 3DS will do a stepped up authentication every single time. And now, that's this way it can almost mimic a card present, with that added security.
Well, and look, when you called in for a mail order somewhere, or you sent something into Sears or whatever it was that you were trying to use a card not present. In earlier years, before e-commerce, there was very limited data available. When you're talking about today's digital age, we know the IP addresses and all kinds of data points around that order, and so I suppose authenticating is just a different process than it would have been in another generation of credit card usage.
Yeah, absolutely. The only problem with that is that the rails that they use for payments on the authorization side were basically similar rails to what they were using in the card present. So there was not a whole ton of data that you could pass through at the time of transaction. Even now, that's what 3D. Even now, that's what 3DS. That's what 3DS is. The 2.0's version is basically the rails that will enable the passing of significantly more data at the time of transaction. Also, the card not present has evolved from e-commerce to mobile to voice activated to Internet of Things. So we're making payments in ways that 60 years ago they could never have imagined, and even 20, 30 years ago we barely imagined. So there's been a massive evolution on that side of it, and that's where that's where the idea of it behind the MV3DS, or which is the 2.0, what they're looking to do. The other thing when people talk about fraud and they don't realize is that because they're using these dummy authorization rails, that's why if I have a brick and mortar store and I suddenly create the same exact business in e-commerce, my authorization percentage will actually decrease by, it could be 10-15%. So I'll get, let's say, 98% in brick and mortar, and I'm only getting 85%. And that's because they're not really that smart. So they're flagging these transactions, which are actually legitimate transactions, as fraudulent transactions. So when we think about fraud and the impact it has on an e-commerce or remote commerce merchant, it's more than just people charging back credit card transactions. It's also declines that should have been in approvals.
Absolutely. And I think that in a lot of cases, thinking back to what the merchants go through, people don't realize that if you're giving up in totality between the annual fees, the monthly fees, the interchange rates and discount points and other things that are stacking up, that if you wind up paying 4 or 5% in processing, let's say you sell electronics and you've got something like maybe a 10 to 20% margin, it hurts. You're selling wholesale, you've got maybe a 20-30% margin. It's painful that the percentage of the profit is very significant in some cases. And then when you start to add in the fraud and insult on top of injury, it really can get really, really painful. It can really squeeze any kind of business when you're dealing with things in any kind of size or bulk. So I think that's often left out of the story, that we've allowed the, payments to become, part of these mega corporations, Visa, MasterCard, Amex, companies that, that I certainly, do business with as a user otherwise. And um, we've subscribed to a process that isn't necessarily merchant friendly, and that's often left out of this conversation. So always glad to be able to talk about it, especially for the merchants out there, that we don't always stop to look at it. But let's circle back here for a second. So friendly fraud versus other types of fraud. Is there a concise definition that you go by when it comes to friendly fraud that says, these are the types of users that something like 3D Secure, can assist with, where otherwise you might be dealing with chargebacks and other fees and headaches and time lost and money lost?
Yeah, so friendly fraud is literally where I make a transaction and then claim I never authorized it. It's called friendly because the customer is actually a legitimate customer. They're a friendly. The example I typically like to use is, let's say, an online furniture company. So they generally have very strict return policies. It'll be a 30% restock fee once I sign for an item. So imagine I buy a couch for $1,000. I ship it to my house. I sign for it. I put it in my living room, and my wife's like, yeah, we're not keeping that couch. Now, I know if I call up this merchant to take back the couch, they're going to charge me $300. I don't want to pay $300 for a couch I'm not keeping. So my thought process here is I'll call up my issuing bank, say, hey, I never authorized this transaction. Let the merchant come pick up the couch. He'll get his money back. I'll get my money back, and everybody's happy. Ultimately, though, the merchant's out the money, they're out the item. And the worst part about this type of fraud is they cannot prevent it from happening. Because if you think about it, everything about that transaction is legitimate. It's a legitimate buyer making a legitimate purchase, shipping it legitimately, signing for it legitimately. The fraud is when he called up and said, hey, I never authorized this transaction. And it's a huge problem. And what's interesting is, it probably existed prior to e-commerce taking off, but on a very small level. And it was ultimately the issuer's problem who paid for it. If you think about it, when you walk into a brick and mortar store, they don't spend $1 trying to prevent fraud, right? Because ultimately, if you use a stolen credit card, it's not their problem. Maybe 1 out of every 1,000 times you go into a store, they might ID you to match it, which I don't think they're even legally able to do anymore. But the idea is that they don't care because it's not their problem. But now we have this added expense that we put on merchants, where in the e-commerce world, they're spending billions of dollars a year trying to prevent fraud. And the most common form of fraud is friendly fraud. It makes up about 75 to 80% of all fraudulent transactions. So,
because look, if you're talking, there are those, I suppose, those categories that you can resell the stuff on the street more easily. And I think that those get targeted more in an organized fashion. So if you're selling, I don't know, jewelry, gold bullion, electronics, things that are easy to offload, not that I would know from experience, right? But those are the things that, back in my agency days, that's where I'd be recommending the client, look, I don't want to get that phone call when you realize that you just shipped out a bunch of orders and you're out the merchandise, you're out the money, you've got nothing. Let's get you protected in advance, because we know that that's the kind of category you have. On the other hand, selling, I don't know, shoes. So somebody orders a pair of shoes. How often is somebody going to call and say that, or how often is a ring of thieves going to be putting in a whole bunch of shoe orders that just seem unusual? And I don't think it's going to happen quite as often to your average shoe retailer. On the other hand, friendly fraud, getting somebody that says that, and tell me, would this be a correct definition? They receive the package, but they say, I never got that. So it shipped, it arrived, and it wasn't on my doorstep. I don't know what happened.
Right. So saying I never received it, there at least a merchant could do something to fight back, and they'd have to get delivery receipt and things like that. But there are instances where even then they wouldn't be able to win, and that would probably fall under the category of friendly fraud. Because ultimately the fraud is when I dispute it for something that isn't true. So that's where the fraud is. But the one thing when it comes to chargebacks, especially for merchants, the one that they can never win is the fraud chargeback. If you charge it back and say, "Hey, I never authorized this transaction," there is nothing. Merchant can jump through every hoop in the world. They're not going to be able to do anything to win that chargeback.
And they'll spend a lot of time because the system basically, it's like waiting on hold for eternity. They're given the option from my limited experience to file for to dispute the chargeback. And they could probably go through up to, depending on where things are at these days, maybe 3 rounds of that. But that's interesting that they're so rarely going to be able to win that how are they going to prove it out? So if the onus is on the merchant and the merchant doesn't have the tools to win that battle, so depending on the category that they're in, talking about higher risk and things, depending on what you're selling historically, and how long you're in business and what your chargeback ratios are, things like that are going to dictate just what kind of percentages you're going to pay to process credit cards. You start to get a bunch of these friendly fraud charges. Not only is it costing you money right then and there that you lost the money for this order that you shipped out, you had to pay a chargeback fee because the merchant gets dinged for that too, that there's a fee for going through that process, but it can also jump your rates.
Yeah, it could jump your rates, or it could eventually shut your merchant account down. So it has a massive, massive impact. I've seen numbers all over the map, but I've seen it could cost merchants as high as 20 to 30% of their bottom line.
Wow, I've never seen it go quite that high. I mean, I know categories, like if you're selling, I don't know, some kind of, herbal supplement, some wonder drug kind of a thing. If you're dealing with, I don't know, and this year's an interesting year for it, travel, and you're taking deposits on things that, people aren't going to take that trip for 6 months. And what happens when, I don't know, that cruise ship isn't around in 6 months? Things
Right.
that different categories and different issues that'll drive up the prices depending on the country that the business is headquartered in, is based in, and banking relationships and other things. But what, 20 or 30%? Hard to imagine what kind of businesses could build in
Well,
that kind of that
yeah.
kind of a cushion.
Yeah, so the 20-30% is really about, if you think about it, besides being out the items that they're out, they have to pay a chargeback fee that could be somewhere 40 to, on average it's about $40, but it could be somewhere between 20 and I think I've seen as high as $60. Plus the processing fees. Usually these type of merchants are on the high risk side, so they're usually paying already in like the 5% range. So all that stuff starts to, add up very, very quickly for these merchants, and usually they're getting those accounts. They have a rolling reserve of, let's say, 90, for 90 days of, some other, it could be like 10-15%. A lot of these costs end up, when you start adding it up to the merchant, it's hard for them from a cash flow perspective sometimes to even stay afloat. So it's just one of those systems, like if you think when you're in the brick and mortar world, you don't have to worry about it, and now suddenly you're creating an e-commerce and you don't even think about it, and suddenly you're like, what's going on here?
It basically, it's a tax to do business. And if there are people out there saying, oh, he's cheating on his taxes or something, then all of a sudden you've got to pay for CPAs and people to, and lawyers to fight the IRS and deal with it. Like, no matter what, you can't win. There's no beating the IRS, right? Nobody wants an audit. So, and 3D Secure, what is it that's actually happening there that's protecting the merchant? What's stopping the merchant from getting this charge back?
Yeah, so what's happening is the merchant's basically passing the transaction information through to the issuer prior to authorization. So it's happening all in real time. And they're basically saying to the issuer, hey, can you determine if this is actually Yitz making the transaction? And it allows them to pull device ID, location, IP address, plus they have a ton of metadata on me as a consumer. So they can tell in real time if it's me actually making the transaction, and if they are able to authenticate and say, hey, this is Yitz making it, they give back what I call like a digital signature, but it's 3 additional fields that get passed through to the issuers with authorization. so that the issuer recognizes it at authorization. Okay, we've confirmed this is Yitz making the transaction. Not only is it going to give the liability shift, it's actually going to increase the authorization rates. So it allows, it's basically the issuers, the simplest way to say it is it's the issuer is determining it's me, and they're saying we're going to assume the liability. And they have to do this because the card networks make the rules and everybody has to follow it if you want to play on their network. So the issuers have to authenticate. If the merchant passes the information through for authentication, the issuer has to authenticate the cardholder.
It's very interesting. I mean, we deal with, in the web hosting world, all this PCI compliance, and it's something that our team deals with often. And that's what a lot comes down to. We don't make the rules.
Yeah.
We can only help people to abide by them. And in some cases, there are gray areas and things. And so we dealt with that this past year with Magento 1 end of life. And if you get patches for your Magento site from a third party, not from Adobe, who owns the Magento brand and are the publishers of the Magento software, if you go somewhere like Mage One, a third party, to get your patches, is that abiding by the PCI regulations? Well, there's not exactly a hotline for people like me. Trust me, I tried to get clear answers on that, even though it would seem to meet the regs, as we've been seeing that software hit its end of life at the end of June, and merchants are doing quite fine with the options that have been made available within the e-commerce community, to stay on Magento 1. So far, so good for those merchants. But it's interesting to see how merchants get caught in the crosshairs. They can't normally get an easy answer on something. They don't have any control. They don't have any choice. This is just how business is conducted. Back to that tax theory of mine. So they've got 3D Secure. That's going to say, hey, look, this is basically an approved order, so there's no way that somebody's going to come back and say that, nope, that wasn't me. We know it was them. Have we seen any trend this year? I mean, pandemic, increased unemployment, economic strife, people just stuck home. I don't know. Has there been any data that you've seen yet this year that suggests any changes in friendly fraud based upon, more people buying more online than normal and from places that they wouldn't normally, things that they would get somewhere locally otherwise?
So you're definitely seeing an increase in fraud just across the board. Just in general, to put things a little bit in perspective of how much this industry has grown, in March, MasterCard announced that I think it was March or April, 50% of their transactions were actually were contactless / card not present, which was a 40% increase from the year before. It had previously been growing by single digits, so they had expected over the next 5 years, card not present would exceed card present transactions. But, obviously COVID and everything around that has caused it to absolutely explode, and it accelerated significantly. With that, it brought a very high increase in fraud rates. Also, a lot of industries that predominantly had been brick and mortar, like restaurants and things like that, majority of their business now shifted to card not present. So what you saw were companies like Square who were forced to hold reserves now on merchants who had been underwritten for risk of a card not present, of a card present type of merchant, and therefore they were considered low risk, and now suddenly they shifted to card not present, and suddenly boom, now they're considered a high risk merchant. So a lot of these businesses,
and in a year when unfortunately there wasn't pure clarity in which of those brick and mortar merchants were going to be able to make the shift successfully. And so look, our credit card processing, it's a form of loan. You run the credit card issuers, are paying the merchant, the money is shifting to the merchant. But what happens if the merchant doesn't ship the goods or isn't around to take a return on the goods, or any number of other inevitabilities? Well, it's the credit card network that's left holding the bag. So it's understandable to some extent that they were going to have to take certain actions, even though it's at an extremely rough time for merchants to weather that. It's always perfect storm in these. Nobody wants to be left holding the bag. And I think that's back to one of the central points that I think has been coming out here is that, as with many things in our lives, the banks hold a lot more of the cards uh, than the merchants or the consumers, for that matter.
Yeah, so the one thing that I'm not sure why, but till this day still surprises me is that the rewards that we get on our credit cards, those are actually paid for by our merchants. They're not paid for
Mhm.
by the issuers, and it's mind-boggling to think. But the merchants, what are they going to do? They don't have a choice, right? It's a cost of doing business. The alternative is just not accepting credit cards if they don't want to pay for it. So when we use a rewards card, it's the merchants are paying a full percentage higher than they would be if you were using a regular credit card. So yeah,
So when I
you've
get
said it
that
exactly.
1% cash back, it's not magic, and it's
Yeah,
not coming out of Amex's pocket or Visa or anybody. It's it's coming out of the merchant's pocket. I mean, it's something that I've been aware of. And look, you use a corporate credit card, it's just as dastardly.
yeah.
When we talk interchange, which is basically the base rate that it's going to cost to run that credit card, nobody actually gets charged. No merchant actually pays interchange because nobody's got a plain vanilla Visa or MasterCard in their pocket. It's all a rewards or corporate or some other version of the card, cashback, whatever you could think of. So there's always going to be some extra on top. So when I walk in a normal year, the floor at an e-commerce trade show, inevitably I'm going to run into a few different fraud prevention technologies, companies like ClearSale, folks that help to block the bots, folks that help to block, uh, you know, uh, orders in general that are fraudulent from making it through the system because there's something known about them or visible about them that doesn't add up, it doesn't match up with the expectation of a safe and secure order in that moment. In some ways, these are complementary from what I'm gathering, because what you're doing is via 3D Secure is blocking um, friendly fraud, which, as we've been talking about, is going to be that chargeback situation, versus blocking a fraudulent order in the first place that that may be otherwise masked as a good order. That there might, would you say that there's some overlap between some of these other technologies, or um, are they completely complementary? Because I imagine that that for merchants, it's probably in some cases challenging to understand how to holistically fight fraud.
So those types of companies are focusing only on true fraud. True fraud makes up about a quarter of a percent of all transactions. They don't help at all on the friendly fraud side. You can use 3DS to stop all types of fraud. The problem is that in 5% of transactions, it'll require what's called a stepped up authentication, which could add additional friction. And there are definitely some false positives within the 5%. So we don't necessarily recommend you utilizing that for that. What will be interesting is that eventually the goal of 3DS and the card networks is to get rid of the onus of fraud on merchants and eventually shift it to the issuers. So that doesn't mean companies like NS8 and ClearSale are going to go out of business. It's just going to shift who their end customer is. So right now it's the merchants. Eventually that'll be the issuers. They're not building their own technologies. They're using third-party companies on the 3DS side, which helps them determine if it's the cardholder. And eventually, the way I see it going is those types of companies are eventually going to, pivot to that and, focus on the issuers as the end
So
customers.
I should expect some of these tech companies to get swallowed up by the issuers before
Oh yeah.
all is said and done. We kind of know how that works. So I kind
Yes.
of see what's being discussed in boardrooms in some of these companies. I imagine that not all of them will be acquired, but that some of them certainly will be. That'll be interesting. Uh, and you know, so Pay is involved with 3D Secure. What is the specific value proposition that Pay brings to the market? Can users get their own 3D Secure account? Do they go to pay to get it? Do they use your system through some other third party? What's the actual interaction like when it comes to your team and the world and what you do uniquely?
So the card networks, they create these protocols, and then anyone can build according to those specifications. They don't actually build their own. So if I'm a merchant and I want to start accepting credit cards in a store, I need a credit card terminal. Those terminals were built according to the specifications that the card brands created, and got certified by that. The same thing works on the 3DS side. So there's something called the 3DS server on the merchant side and what's called an ACS on the issuer side. We are what's called the 3DS server. So theoretically, a merchant can build their own 3DS server, go through the certification process, and then use it. But it's generally easier to use someone like us. Globally, there's, I think, about 90 of us that could do this. In the US, there's only 3 active companies. So what we've done is we've built it in a way that it makes it super simple for a merchant to be able to start using 3DS. So we have a JavaScript SDK, which, in essence, is a few lines of code that the merchant drops into their shopping cart or their payment form. And then they're already they can start using 3DS immediately. So we take care of everything soup to nuts. We went through the certification. We help get it registered when the card brand requires a registration, and we do all the authentication on their behalf.
And so it's a quick implementation. Do you have pre-existing integrations above and beyond that with different gateways or processors or e-commerce platforms, or basically you've got your SDK, they grab some JavaScript, implement, and, on a merchant by merchant basis, store by store, it gets loaded up?
Yeah, so we're pretty much, we're processor agnostic, gateway agnostic. We're technically platform agnostic, though certain platforms, they don't allow you to edit the payment form.
Yeah, so if you're dealing with like Shopify, you might not be able to edit the checkout flow,
right,
to insert something along the way.
Correct. But we are working on plugins for all the different shopping carts so that, it's even easier for merchants to start using us on those platforms.
That's really interesting. So, and would you say while this is happening, is it adding any time to the checkout as your servers are being pinged to verify this to be good before it finishes the checkout process? Or on the shopper, on the user, is it any different before or after this technology is implemented on the website?
So from a consumer standpoint, you cannot tell the difference before or after that they're using pay on there. Technically, it takes up to 8 to 10 seconds on average for the authentication on the 1.0 side, and on the 2.0 side, it's taking about 2.5 seconds. We get around that actually by doing the authentication during the checkout. So we wait till we get the basic information that we need, which is cardholder name and cardholder number and expiration. And then while they're filling out the rest of the payment form, so it could be shipping and billing address, we do the authentication so that by the time the cardholders click submit, it goes straight for authorization. We've already done our side. We saw that waiting that 8 to 10 seconds is a lifetime in the e-commerce world, and you can't have that. That does cause real conversion issues.
Yeah, there's nothing worse than the shopper clicking, the checkout button more than once.
Yeah, exactly.
To complete the order. And would you say that that there's some kind of threshold that makes sense for a merchant to really look at deploying this kind of technology? Do they have to have a certain number of orders or revenue or something to be worth their while today to independently deploy because of any kind of cost along the way? Or basically you don't see a reason that that a merchant wouldn't have it?
So on the 1.0 side, it used to require merchants that had a lot of chargebacks, so their chargeback ratios had to be pretty high for it to make a difference. If you were a low risk merchant, the only value add there was like interchange, and it was like you're talking 10 to 15 basis points. It wasn't a whole lot. With 2.0, because it impacts authorization issues, it's 2 to 15% of their top line revenue. So pretty much any merchant, I mean, our costs, we're a few cents per transaction. So it's really pretty simple for a merchant to start, and the cost that they're saving is usually significantly more than the benefits that are outweighing the actual cost. So with 2.0, I would say that any merchant, doesn't make a difference what size you are, should be using it.
Yeah. So if they have a high ticket item, absolutely. But in general, it's
Absolutely.
going to pay for itself for most users.
Yeah.
That's always what I love to hear. Look, I've always said I don't mind, spending money that makes money, that actually saves money. That I don't mind another vendor in there as long as everything plays nice, and doesn't create more technical debt or friction of any significance. And it sounds like with a little bit of JavaScript, not a lot going on there, which is great. Uh, are there a lot of e-commerce merchants that are already using 3D Secure or 3D Secure 2.0, or is it a minority of users out there?
Yeah, so it's a very, very a small minority of users that are currently using 3DS, specifically to the US. Europe and other regions, that's a totally different animal. But when it comes to the US, I mean, we're generally, especially with payments, as technologically advanced as we are as a country, we're a dinosaur when it comes to payments. So pretty much all the other countries in the world see some level of decent adoption of 3DS. The US has minimal adoption of it. 2.0 is the card brand's way of getting behind that, and they're actually excited about it, and they're pushing it. So there will be a lot more. You will see over the next few years, I think, a lot more merchants adopting it. They're addressing a lot of the pain points that the merchants were seeing in the remote commerce world, and they'll be rolling out other protocols as well on top of this,
Yeah.
to allow merchants to benefit.
I know that specifically in the Magento ecosystem, most of the payment gateways were basically kicked out of the core. And, they were core bundled extensions as I'd look at them. So you had all sorts of gateways that were included by default that you could choose from. And Magento said, no, like there are too many of these that aren't secure enough, that aren't up to date enough. Basically, like we'll leave in Braintree or something, but otherwise just go to the Magento marketplace, go to your payment processors, get the best thing on the market. They didn't want to be responsible for the upkeep because they knew that the technology was going to be evolving, and they knew that what they had on their hands didn't make sense. So
Yeah,
I think
exactly.
even from the platform perspective, there's been at least some foresight, insight into what's going on. Um, Given the interesting role that your team plays, what kind of role have partnerships played in what you do? Because I would imagine that, that there are a lot of players that are somewhere in the middle of the stream, because that's often what merchants get confused about when it comes to the entire payment process. That you've got your payment gateway that's actually running the credit card, and somewhere along the route there you've got payment processors and issuers and banks and so on and so forth. That there's this whole slew of different companies that have their hands in the mix, um, as opposed to working with individual merchants on the case by case. Have you found that at this point that there's probably more, or maybe more, interest coming from the middle market to try to get ahead of the problem that they've
Yeah,
for so
so
long not gotten ahead of?
Yeah, so we've always been focusing on small, medium-sized merchants. That's been our core, at least initially. They were the lowest hanging fruit. They were the ones who saw a lot of pain points with their chargebacks, and trying to stay one step ahead has always been a problem for them. They were also kind of like the forgotten ones in the ecosystem. The other thing we did is that we don't really sell direct to merchant on the small, medium-sized level. There we're going after the partnerships. So the processors, chargeback mitigation companies, gateways, CRMs, people already have a relationship with the merchant around their payment stack. Instead of us going out there and selling it to the merchants, we just found that they were always putting us on the phone with one of these partners and saying, hey, can you explain it to them? If it makes sense to them, then we're going to sign up for it. because they don't have the internal bandwidth to make these decisions on their own. So they were always outsourcing it. So we're like, instead of, doing that anyway, and then it's a double sale, let's just give them the ability to go out there and resell our product. And that's where we've been focusing. Obviously on the enterprise is totally different. There we do direct, but on the small, medium size, we're only focusing on partnerships.
It's definitely confusing for merchants.
Yeah.
If we can agree on anything, which apparently we can agree on a lot, but I think it's that the merchants get handed a need to be tech companies, and to have a lot of knowledge and resource and time that is so rarely available, and that's where a lot of trouble happens. It's why companies like JetRails are out there dealing with all the security and loading speed optimization and scalability and all the things that we do that, you can go spin up a server somewhere, but you're probably not going to be very happy with the outcome over time. It may be okay for a while, but long term, without the right maintenance and management and monitoring, you're asking for trouble. I think the payment side is a little bit of the same, that trying to deal with separate gateways and processors and fraud solutions and other things. It's a lot. When there's a problem in the stack, figuring out where that problem is painful. When you've got too many vendors in the mix, it's, even taking a step even farther back from it, just getting to the base understanding of what the inherent differences are. Here I was talking about other fraud solutions and how these can stack together. Vendor management becomes, I think, challenging in general. Not only figuring them all out, but continuing to keep an eye on what they're costing you, and if everything is properly implemented as you continue to upgrade and deal with other things. So that all jives with my way of thinking around these sorts of things. You go to someone like authorize.net and you say, I need credit card processing because their gateway is in so many platforms. And I've done a lot of business with authorize.net through the years, and they're not a payment processor, but they'll sell you payment processing through a partnership, not necessarily the best rates or anything else, but you came to them and they solved your problem. I like when there's a top down, when there's been really that that here's the stack, here's what you need. We're going to take away your pain. We're going to protect you. We're your partners in this. I think that the more that merchants find companies that say, that take that approach, we're going to be your partners in this sector of your business to make sure that things are smooth, that you're successful. It's just a beautiful thing, marriages within the industry. So
Yeah, no, absolutely.
Anything new coming down the pike that we haven't touched on? Any hopes and dreams for later this year or next year in terms of what your team is up to and what the industry is up to?
Yeah, so we'll probably one of probably the biggest thing, and it's a whole other conversation, is PSD2 in Europe. So if you're not familiar with it, or for whoever is listening that isn't familiar with it, it's basically they're forcing banks to open up their APIs, to foster competition in the banking world, and what that ultimately is doing is it potentially puts consumers' financial data at risk. So they're requiring what's called strong customer authentication, which is two-factor authentication, something you have, something you are, something you know, 2 out of 3 of those. And they're requiring it on every single transaction. As of now, it's going to be effective January 1st. We'll see if that gets pushed off again because of COVID, 6 months. But if merchants do not do SCA or strong customer authentication, those transactions are going to get declined. Right now, the only thing that's PSD2 compliant on the payment side is 3DS, which means that all the merchants have to start implementing it. There is a downside to it because they can't necessarily control what the experience will look like. With 3DS, it's the issuer that does. So we will be rolling out what's called a merchant-controlled experience that they'll be able to do. So think like a company like Amazon or Uber, right? Their entire business model is built around customer experience. And then when it comes to the payment side, you're taking that experience away from them and putting it in the hands of the issuers. It's a no-go. So what we'll be doing is offering a solution that will allow merchants to control that experience. And then eventually we're probably going to be rolling out our original product as well. That quick checkout option, it plays really nicely with PSD2, and it's going to be PSD2 compliant. It'll give consumers the ability to kind of control their experience and know what it's going to look like every single time they check out.
Yeah. We talked a little bit about that situation in episode, looks like it was 34. So going back a little bit earlier into the pandemic, and Europe always pushes us to evolve, including with things like data security, GDPR, and some of those other situations. So no huge surprises here, but glad to hear that the industry is, as we typically anticipate in tech, is rising to the occasion to be able to help merchants deal with this more elegantly. Because all that any of us in the industry really want to see is just a sleek, friendly customer experience, and regulation rarely helps with that. So that sounds fantastic. Yitz, it's been a pleasure getting to meet you today and chatting about friendly fraud and a bunch of other related topics. Any final thoughts before we wrap?
No, I think I'm good. I really enjoyed the conversation. I appreciate the time. This was a fun conversation.
Awesome. Well, to our listeners, thank you as always. We'll have some other new episodes coming up shortly. As always, feel free to subscribe wherever you listen, and happy selling.